So I welcome you all. Good morning, first of all. Welcome you all for this first PentaTalk series of 2023. Thank you very much for taking out time on Saturday morning to join with us. As Mr. Warren Buffett said, I quote, the most important quality for an investor is temperament, not intellect. I unquote. Today's webinar on mistakes people should avoid while making financial decisions revolves around the same. It is not only talks about the problems, but also emphasizes more on the behavioral solution one can implement to avoid financial mistakes. To talk on the same, today we have with us Mr. Nimesh Chandan, Chief Investment Officer of Bajaj Finserv Asset Management Company. Thank you so much, sir, for joining. Nimesh, sir, is an investment professional with 22 years of experience in investing in Indian capital market. Over the years, he has developed an investment process that generates alpha through informational, analytical, as well as behavioral edge. In his more than 17 years of association with mutual fund industry, he has developed models on sustainable investing, quant investing, and asset allocation. Nimesh sir is a keen follower on behavioral finance and has been writing and presenting on the role of psychology in investment decision making to investment community. He has developed a set processes and tools that help reduce one's behavioral mistakes and understand the crowd or market behavior. We welcome you, sir, and thank you so much for accepting our invitation for our PentaTalk series. Thank you so much, sir. I would also like to tell all of you that we will have a Q&A session with sir towards the end of this session. If anyone has any question, I request you to kindly put it in the Q&A tab of your Zoom screen. It is also quite possible that during this session, we will talk about different investment avenues. Hence, this disclaimer becomes very, very important that mutual fund investments are subject to market risk. Read all scheme related documents carefully before investing. Now I request Nimesh sir to kindly enlighten us with his knowledge and experience. Over to you, sir. Sir, your mic is not. No, sir. No, it's still not working, sir. No. So can you please, maybe you can just drop and log in again? Yeah.
Are you able to hear me now?
Yes, sir. Thank you so much.
Perfect. Okay. I don't know how that happened.
Yes. Over to you,
Yeah.
sir.
Yeah. Okay. Let me just quickly then first load the presentation.
Sure.
Is the presentation visible now?
Yes, sir. Absolutely.
Okay. Okay. Good morning and a welcome from my side for this webinar. Um, Pentagraph has been kind to invite me for this first PentaTalk and honored to be here. I will have a short presentation, about 25 minutes or so, and then we can have some Q&A also. Let me quickly start. Um, yeah. I'll put my video off just for better use of our bandwidth.
Sure, sir.
Yeah. So let me start with a small story. Max Planck, who is the father of quantum physics, a very renowned scientist, Nobel Prize winner, one of the best minds of his time. He was compared often to Einstein. And he met with an economist, one of the best economists of that time, again, John Maynard Keynes. And we have heard a lot of his theories and his impact on economics. So when the two of them met, Max Planck said that, earlier I was thinking of taking economics for studies. So Keynes asked him, that would have been great, but why didn't you? So the answer was that it's very hard. That's what Max Planck said. So Keynes was a bit confused. Uh, for somebody who can study things which are at atomic, subatomic levels, provide those calculations, how can economics be tough for somebody like that? The answer was he, physics or quantum physics has objects of study which do not react emotionally. Human beings are the subject of economics, and human beings react emotionally. So you can't really predict in the exact way how things will work out. So this is one reason why uh, economics, finance, and investing become tough. So investing is simple, right? नीचे में buy करो, ऊपर में बेचो. How difficult can it be? But it is not easy because of the involvement of a lot of emotions. Now, this is a typical pendulum that everybody would have seen, that people swing between greed and fear. When markets are doing well, people become hopeful, optimistic, and go into euphoria or greed. When the markets are falling, people actually want to get out. They become pessimistic, they become fearful. And if you keep swinging with this sentiment between greed and fear, you don't make above average returns. You make the returns that an average crowd would make, but even maybe many a times lower. There are also other emotions that affect our decision making. I put three studies done in the very recent past about people investing directly, investing in FNO, and investing in mutual funds. A lot of investors came in to the market in the last 3 years, but you will find that most of them have made suboptimal returns. And why is that? So the first statement I put here is from the largest online broking house in India, Zerodha. They made a statement that less than 1% of their traders are able to make more returns than bank FDs, mainly because of, again, short-term focus is not making you money. The second study came out from the SEBI side. a lot of investors are involved in trading in futures and options, but almost 90% of them, they don't make money. They make losses. This is a study by SEBI. And third is a study by Morningstar. Recently, Morningstar studied the behavior of investors in mutual funds. They also found out that many people actually come into the asset class or into a fund after it has done well, and they get out when there is a small drop in performance. So trying to time the market, right? Trying to time the fund also. Uske liye you will find the study shows that people are actually making less return than what they would have if they had just stayed put for that time frame. So let's talk about what we can learn from from games and sports about how we can achieve our financial dreams, how can we control our behaviors, how we can make better returns in investments. I put together a few stories, examples here, and some learnings from them. So, what typically investors make mistakes, and what can we do to avoid those mistakes? How can we become better investors? Let me start with a story about Sachin Tendulkar first. In 1993 Hero Cup, we were playing against South Africa. The Indian team was out at a score of about 193 in 50 overs. South Africa started slow, but then they picked up pace. By the 49th over, they required 6 runs to win. So the seniors in the team were discussing, "Okay, abhi bowling kisko dein?" After a lot of discussion, they handed the ball to Sachin Tendulkar. Sachin was a champion batsman, obviously, at that time. But bowling, he was given, people were surprised. And this was in Eden Garden in Kolkata. You can imagine the atmosphere. Sachin bowled that over where he gave only 3 runs. So India won by 2 runs. And obviously, the whole stadium erupted. And people were praising the decision taken by the captain, by the seniors in the Indian team. And the next day, obviously, the newspaper started talking a lot about how it was a brilliant decision to give Sachin Tendulkar the bowling. Now, think about it. If Sachin Tendulkar had bowled the first ball and it was the 6, and suppose even in the second or the third ball, South Africa had won easily, how would the people and the press would have reacted to this? Many a times, we are outcome biased. कि अगर रिजल्ट अच्छा है तो प्रोसेस अच्छा होगा, रिजल्ट खराब है तो प्रोसेस खराब होगा. Actually, when you go through the speeches by the captain and the seniors during that time, you will find कि उस समय every fast bowler had an over left. Kapil Dev had an over left, Javagal Srinath had an over left, Manoj Prabhakar had one over left. But they gave the bowling to Sachin because they wanted to take the pace of the ball. Fast bowlers were being hit for many runs. Uske just pehle Javagal Srinath had bowled an over where he went for 14 runs. So it was a very calculated, thought out decision that we need somebody to take the pace of the ball so that South Africa doesn't score easily and in a way surprise the batsman by having Sachin there. And by the way, Sachin repeated the same feat again in 1997. So it is important to have a good process when you are investing. A good process will give you good long-term success. A bad process obviously will give you a bad outcome because say मैंने एक ऐसा investment process बनाया जो dart board पे darts डाल के I will pick up stocks. Even if I do well for some time, it will be short-term luck. It will not be a good process. It will not give me good long-term success. On the opposite side also, good process generally gives you long-term success, but ऐसा हो सकता है कि even for a short period of time, even a good process may not give you the deserved success because uh, of the factor of luck, randomness, uncertainty in the market. So, first, most important thing to have is have a good process and follow that process with discipline, and that will give you good returns over a longer term. The second story I have is about another champion Indian cricketer, Rahul Dravid. Rahul Dravid is one of the best players of Test cricket in the world. He was, as you know, called the Rock of Gibraltar or the Wall. Rahul Dravid in Test cricket has so many records in his name, like the best average runs, best partnership, most hundreds partnerships ever, all that. Not many people know कि उनका और एक interesting record भी है कि he is the person who has faced the most deliveries in Test cricket. He's also spent the most time on the pitch in Test cricket. So, in terms of deliveries, Rahul Dravid has faced about 31,280 deliveries. And काफी cricketers like like the great cricketers Sachin Tendulkar himself also, they have not even come close to that number. Rahul Dravid still, if you see his scoring and you remove chalo ke kitne 4 6s mare, you will find कि out of these 31,000 odd deliveries that he faced, approximately 23,000 deliveries he faced as dot balls. छोड़ दिया था उन्होंने या रन नहीं लिया उन्होंने. तो फिर इतना अच्छा एवरेज कैसे हो गया? Rahul Dravid used to be on the pitch thinking कि opportunities आएंगी, then I'll capitalize on it. I don't want to hit at every ball. I don't want to try to make score or make runs at every ball. So one of the things we can learn from Test cricket is be patient. Don't try to swing at everything. In markets also, we try to capitalize on every move, like try to time the market. Every little bit we try to put a trade or try to make some investment, sell something, buy something. Let's say every asset class gives you an opportunity, uh, but you have to be patient to wait for the right ball to score. And when the right delivery comes, tab hesitate na kare, tabhi you have to act with conviction. Let me move to another interesting sport or game where India has done extremely well. Uh, it's chess. As you would have figured out, Vishwanathan Anand, one of the best Indian grandmasters and world champions. Vishwanathan Anand came out with a biography in December 2019. Then बाद में COVID आ गया and I think the book could have been marketed better. I went through that book. It's a fantastic book if anybody wants to read. Vishwanathan Anand typically, like whenever he used to go for a game against an opponent, तो पहले he used to research and study about that opponent properly. कि वो कैसे games खेलते हैं, what are his strategies, how to win against that opponent. Plus, he used to also study कि पहले जो ग्रैंड मास्टर्स रहे हैं, चैंपियंस रहे हैं, how did they play their games, what strategies they used. So he used to do a lot of research before going into a game. He also used to maintain a journal, एक book लिखते थे, where he used to write down after every game कि what worked for him and what mistakes he made or what did not work for him, so that he can avoid those mistakes and try to capitalize on a good strategy that he has got. So, if you go through that book, you will also find that 1997 में जब Gary Kasparov was playing against the IBM computer, the computer defeated Kasparov. And तभी chess world में काफी चर्चा होती थी कि what is it? Is the computer the future of chess? क्या होने वाला है इसमें? Lot of people used to actually say कि नहीं, ये तो computers is like can only think short term, तो उसे use नहीं करना चाहिए. Now, when Anand saw this, he actually adopted technology and used the computer in his favor to make better decisions. So he used to plan some opening moves और बाद में computer wait करते थे what the computer will respond and see what all strategies his opponent can use and learn from that. What can we learn from chess in investments? First, research well before going into anything. Have a good background about what you are investing in. What is the success that investors have had with this particular strategy? What can be the risks in that strategy? Use technology wherever you can. And finally, make an investment journal. जैसे Anand used to keep a journal to record wins and losses and see what happened in a particular game. Write a journal about when you are investing in something, why you are investing or why you are taking that decision. वो लिख के रखें so that when you see the outcome, so at that time you are not just looking at numbers. You are also seeing कि मैंने इस पे invest क्यों किया था, whether my hypothesis, my argument worked or did not work, whether the outcome was because of luck or because of skill. The next idea I have taken is from poker. Annie Duke is one of the world champions in poker. She has written a book called Thinking in Bets. It's about how to improve your decision making in everyday life. Uh, Annie Duke used to say that you cannot predict कि आपको क्या cards मिलेंगे. You cannot choose the cards, obviously, in poker, but you can decide how to play those cards, how to play that game. So the similar thing is in the markets, right? कि you cannot choose कि market conditions क्या होंगे. But your investment strategy, your investments are decisions are in your hand. So how you can make those better? A poker player typically looks at the cards, estimates के इसमें what is the probability of winning, what is the probability of losing, what is the chance, what are the risks that I'm taking, what are the profits or payoffs I can make. In a similar way, a investor also has to understand okay, what kind of scenarios will uh, let me make money on this investment, what kind of scenarios may I can make a loss. So looking at like a bull bear case कि कितना what kind of money I can make in this, what are the payoffs, and then what are the risks and probabilities around that. So this is one way of reducing your biases towards एक जो endowment bias बोलते हैं कि if I bought something, I always try to think positive only कि मेरा like you know I will surely make money on this even if the price looks like going down or bad news आते हैं for that investment. It is also you avoid confirmation bias through this कि you typically अगर हम कुछ invest करते हैं we like to meet people who say good things about that investment or who also are invested in the same thing. So like you know there is a confirmation bias okay, we want to hear good things only about what we have invested. Doing a scenario analysis tells you okay, what can work, what can go wrong, and also tells you okay, what to watch out for. People who are in running marathons would know this person. This is a picture of Eliud Kipchoge. Eliud Kipchoge is the only marathoner who has completed a marathon below 2 hours. He has completed in 1 hour, 59 minutes, and 40 seconds. During this run, Eliud Kipchoge prepared very well for how to make this run. He used to, he first selected the right place which suited him to run. The place where he ran this marathon was in Vienna. He's from Kenya. So Vienna and Kenya ke time zones and weather conditions were similar. Second, जो route which was selected for running had less ups and downs. It had a route which suited him the best to give his best for running. So he selected where he wants to run, the right strategy which suits him. And he also had a few other marathon gold medalists who were running with him. They used to run in the form of a V-shaped pattern in front of him, and every 5 kilometers they used to change, and they were all champions, marathoners. They used to keep him focused on running at a certain pace. And another thing they used to do was reduce the air pressure that would hit him if he's running alone. So that cutting that air pressure reduced the resistance for him, and he made that below 2 hour marathon successful. Investing is also like a marathon. It is not like a sprint. First, uh, first few trades में बहुत पैसा बना लिया and then just sit there. वैसे नहीं करते, right? Investment में, investment is about being consistent over a period of time and making money by following a consistent strategy. ऐसा नहीं कि कुछ टिप लेके मुझे फटाफट पैसे बनाने हैं. Most of the people who are trying to make money quickly end up actually giving money into the market. It is also about choosing the right strategy that suits you. कुछ ऐसे risky strategies या हैं जो आपको suit नहीं करती. It may not suit you emotionally, it may not suit you financially. So you have to choose the right strategy which suits your goal rather than look at what others are doing. And the most important is network with the right people. If you are in a company, अगर आप long term investor हो and you are in a company of people who are day traders or F&O traders, it will not help you. It will only disturb your strategy. So network with the people who are good thinkers, good investment thinkers, who have similar strategies as you, and then you will do better in investing. There's an interesting study by Paul Slovic. Paul Slovic is a psychologist who did this study about predictions. He brought together about a few horse racing handicappers or horse racing experts जो horse racing के bets लगाते हैं, odds बताते हैं कि particular horse जीतेगा या नहीं. उन्होंने 40 years of horse races का data collect किया, and for each race, each horse he collected 88 data points. And in experts को उन्होंने बोला कि we will rerun some of these horse races for you. You can choose any 5 data points in the first round about these horses. जो आपको लगता है कि 5 data points are important to predict कि whether ये horse इस race में जीतेगा या नहीं. And these are historical horses, so we know the outcomes, but we are going to replay them. They will not give the name of the horse and the name of the jockey, but you can ask out of the other 88 data points, you can ask for any 5 that you think are important. So then the experts were asked, can you please make a prediction? They made some predictions. उसके बाद उनको पूछा गया कि how confident are you? आपको क्या लगता है? What is your chance that you will be right? On an average, the experts said we are confident 19%. So there is a chance that we will be right 19% of the time. And actual data जब देखा गया तो they were 17% accurate. They were right 17% of the time. Now in the second round they were told now you can take any 10 data points instead of 5. Third round में बोला you can take 20 data points, and fourth round में you can take 40 data points. When at the fourth round they were asked, okay, how confident are you that your prediction is right? The average was around 45-47% confidence. And how accurate were they? They were 17 to 18% accurate, which means okay, by taking in more data beyond the important data that they thought was important, the confidence level went up, but accuracy did not go up. Beyond a point, after collecting all the important information and all, just trying to get more and more and more and more information doesn't help. It only improves your confidence. It doesn't improve your accuracy. And imagine in a world of investing where there is uncertainty, randomness, if you are super confident about something that is not accurate, imagine the kind of losses you will face. Here, one can use a simple tool called a investment checklist. to check कि before investing, these are the important points I want to check. So have that checklist कि before every investment, I want to check these data points. उससे आगे मिले ना मिले, but these are the important ones that I want to focus on, and then invest according to them, rather than trying to hunt and pick up any noise, any data that I can get my hands on. Noise say uh, I'm moving to another uh, important story about a sports person who handled noise very well. So in 2016, in Rio de Janeiro, in the Olympics, that was the last Olympics where Michael Phelps was competing. Michael Phelps is by far the best swimmer in history. He has won more medals than anybody else in swimming. Whenever, so during 2016 also, in his usual style, when Michael Phelps entered the stadium where the swimming race was being held, he came with his regular noise cancelling headphones and came in. And people started questioning, "Ki ye kya, why are you always seen with the headphones?" And he removes these headphones very close to the start of the race. A lot of sports people do that. So people are inquiring, why does that happen? So sports psychologists say that these champions, they actually wear these headphones so that they don't get distracted by the noise and the comments of the audience who is in the stadium. Now it makes you think, right? Okay, ऐसा like superb champion है, like he's won so many medals, पूरा साल prepare करता रहता है to come to these events to win. And last few minutes mein, the guy gets distracted kya, from these comments and noises. It actually does happen. And in investing also it happens, right? We get distracted by certain data, certain noise, and we make the wrong decision. Noise in investing is about data that is not useful in your decision making. But because you keep getting bombarded on various different channels, your phone, your TV, or other media, social media, that it distracts you from the right decision making path. uh, like some of these champions, you should have uh, a headphone that cancels this noise, and that headphone is again your investment process. It's your investment process should have uh, steps or processes which help you cancel this noise, to avoid this noise. And then you will be on a better investment wealth creation journey. The last sport I have to talk about is tennis. People know this champion, Roger Federer. Between 2003 and 2011, 2010 actually, Roger Federer was almost unbeatable. He had won 5 Wimbledons, 4 US Opens, 2 Australian Opens, one uh, the French Open. So he had won, like, every year he used to win multiple championships. Then between 2010, 2011 and 2016, guess how many championships he won? How many tournaments? Only one. And he used to make it to finals and semi-finals of a lot of tournaments, but that was, like, not sufficient for a great player like him, right? He got semi-finals tak hi पहुंचे. In 2016 he had to actually, like, because he had some injury, he could not finish some of the tournaments also. Then Federer he uh, goes through a certain period of retraining himself. In 2017 he comes back with a racket which has slightly bigger face. He has changed his backhand style. He was earlier used to do a chop, now he is doing a topspin. That is helping him get into the position of the forehand much faster than others. Uh, And now suddenly, in that year itself, he wins two championships. His win-loss ratio is 54-5, which means he's winning 90% of the games. Now, he changed a few things. He came back, retrained, and he improved himself uh, by putting new tools and new ideas. For investors also, even if you are a champion, don't stop learning, right? Don't stop evolving, don't stop improving. Your process also has to go through improvements over a period of time so that it can adapt to the changing market conditions over years, not over days, but over years. It has to improve. New tools, new technologies will come, which will help you improve your decision making. Also, some of the mistakes you make, learn from them, uh, accept them, and try to improve on them. That way, you can keep improving your process and you can keep improving your outcomes. To summarize everything from all that I have put in this presentation, in these different stories, this is the summary. Think long term, be patient. When the right opportunity comes, you have to act with conviction. Research well about the markets and the strategies that work. Use technology as much as you can. Keep an investment journal, do a scenario analysis. Make sure that the strategy you are using is right for your goals. Network with the right people, very important. Use an investment checklist, use your process to cut the noise, and keep learning. So I'll stop my presentation here and open up for questions. Ashit, if you want to moderate uh, this call, this question answer session, up to you now.
Yes, sir. Thank you so much. Thank you so much, sir, for such an insightful session. So it was really wonderful when you were talking about the outcome bias, like from cricket, or like making an investment journal. That was like quite interesting that we have understood from Mr. Vishwanathan Anand, as you have shared. Then thinking, about the bets in between, you have shared some books also that we can really go back and refer in later. And the most important, which I understood, which I took back from this, is basically investment is a marathon and not a sprint. So we should not have a very short term view when we are doing any sort of investments. So thank you so much, sir. Thank you so much. uh, I'm sure we all are waiting for some questions to be answered. Now the floor is open for the Q&A session. If you have any question, you can put it in the Q&A tab, or you can raise your hand as well. And you can ask sir directly about the all the questions that you may have. So I'll just wait for sir maybe 1 or 2 minutes for
Sure,
any
sure.
questions to come. Although we have already received few questions from our investors, as well as few advisors has also asked few questions, so that I will take in between. Let me just wait for maybe a minute or so, then by the time people raise hand or maybe put it in the Q&A. So I request you all to kindly post your questions if you have in the Q&A, or you can raise hand so I can unmute you. So by the time, sir, question comes, I just would like to ask on behalf of our investors, very important question. That is what I feel, that how much important it is to align our investment to our financial plan based on our life's goal. So how we really can do that in our practical daily life.
It is extremely important. So,
Yeah.
uh, I had mentioned something like this during the example of Elliot Kipchoge taking this marathon.
Yeah.
Elliot Kipchoge was anyway the fastest, marathon runner, but he had not completed within 2 hours. He said, "Okay, how can I see to it that I complete within 2 hours, because it was considered to be humanly impossible to complete it within 2 hours. So a lot of effort went in. Now the goal was clear, right? That I have to finish this below 2 hours. So he had finished it earlier in 2 hours, 1 minute, certain seconds. So he knew how many seconds he has to actually reduce.
Yeah.
So the goal was clear. Then everything was aligned to make that goal or achieve that goal. So as I said, what type of runner is Eliud Kipchoge? He's a Kenyan who's run like in a certain time zone. He's most fresh or he's most productive in a certain time zone. So you take that kind of place where the time zone is right. Second, he is a person who runs best when it's a straight road and there are less ups and downs. So you select the turf or the road where you're running according to what suits you the best. So
Yeah.
all tools, all the plans have to align to your goals, that what your long-term goals are. Uh, Only you know uh, what suits you more than anybody else. So rather than copying somebody else's plan, you go for what suits you the best in terms of temperament, in terms of your risk appetite, in terms of your financial appetite, all that.
Thank you. Thank you, sir. Mr. Vipul Hura has a question. Sir, you can unmute yourself and ask your question. Mr. Vipul Hura.
Good morning, sir.
Good morning.
Sir, how does the age factor affect the investment goals, and how do you realign the investment along with the change of your with the age, with change of your responsibility?
Hmm. So actually, this is best answered by somebody who is doing your personal planning. Uh, but I'll just give my view or two, a couple of ideas on that. People used to use a formula called 100 minus your age and then put a certain equity allocation and fixed income allocation. I think that may not suit everybody. It is better to align to your financial goals, and I think Ashit mentioned about it in his question earlier. The second thing about this is that a lot of us want to uh, not only plan for our retirement but also want to keep something for our kids and for the next generation also. So we have to put certain amount, we need to continue to put certain amount in certain long term assets which continue to create wealth over a longer term, and which we can leave for our next generation also. So certain income requirements will be there and certain wealth requirements will be there. So accordingly, you have to plan. So rather than using again generalized rules like 100 minus the age or so, I think it's better to speak to a good financial planner and align everything according to your goals. So that doesn't mean that if somebody is investing their portfolio 50% in equity, which means you also have to do that. It will be different for you, and depending on where you require incomes. Now there are a lot of beautiful packages also which share with you perspective about what kind of compounding you require to reach to a certain goal, what kind of inflation estimates are there. But better consult a good financial planner. It will be very, very helpful if somebody can give you the right asset allocation.
Thank you. Thank you, sir. Thank you, Vipul, sir, for asking the question.
Thank you. Thanks a lot.
Thank you. Uh, so, next question I would like to ask is that I think you have already answered this to a good extent in this when you are answering Mr. Vipul. That can you elaborate the concept of herding behavior and how it affects our investment decision?
So there is a very interesting case study on this. So first, let's take a very simple example. If you are in a foreign country, You are traveling to, say, somewhere in Europe. You go to, after sightseeing and all, you go to a street where there are restaurants and you want to plan dinner. Uh, you come across two restaurants which have the cuisine that you would like to have today. So whatever you choose to have. But there are two restaurants which give you the same cuisine. One is quite full, the other is almost empty. Which one will you choose to go to? Most of us will choose the one which has many people in it, because कुछ तो अच्छा है कि, like, people are going there.
Why people are
So
going?
yeah. So being with the crowd gives us comfort, and this is what most people do. Now, unfortunately, certain things that help us make easy decisions in life may complicate a little bit when it comes to investing.
Yeah.
So if we go with the crowd all the time in investing, then you don't make superior returns than the crowd. Then you make the returns that the crowd is making, or even less if our timing is bad on that.
Okay.
There was a study done by I forget the psychologist's name. Okay, it'll come to me maybe while I'm talking. Solomon Asch. See, so Solomon Asch did a study where he put people in groups of 8 to do a decision-making study that they did. Now, he very smartly what he did, in every group, the real test subject was only one. 7 others were actually his own friends and, like, co-researchers. But they used to pretend that they are from the general public. Now, then he used to pose a question, which would be a easier question, say, the 7 of them will answer first and give the wrong answer. Okay, so you will draw something and say if it is an elephant, 7 of them will say it's a cow. Okay, something like that. Then the pressure is on the 8th person. कि यार मुझे तो दिख रहा है something else, but the crowd, so many people can't be wrong. So most of the time, then the test subject went with the crowd. And as the questions get more complex, people tend to go with the crowd. And that is what is hurting, right? When in investments also, then going with the crowd, because investment is not easy. So people tend to go with the crowd, and this herding may actually get you into a particular asset after it has run up, and make you get out of the asset when the crowd is panicking at the bottom. So you do exactly opposite of what you should be doing then, and that will hurt your investment goals.
So how we can keep ourselves afloat when there are so much of noise and misinformation which is floating around us, like in the field of this social media and everywhere, which is like quite evident here. Everyone is bombarded with all the informations, whether it is good or bad. That is up to them how they take it. So how we can keep ourselves afloat from all this as an investor?
So it requires one to have a good investment process, and that investment process should be about focusing on things that uh, give you a good insight into your investment. So, as I said during the horse racing example, that few data points are important while taking a decision. So, you need to have a checklist. Okay, I want to check these things before I make an investment. Okay. So that will give you the right information. Second, you have to understand how to process that information better. Okay. Uh, am I taking this decision because I'm reacting with the crowd, or am I taking this decision for, say, the right reasons that I see in them? And write down those reasons. Also, what kind of strategy are you following? Is it something that has given returns in the past? So, for example, you will find many a times contrarian strategies give you better returns. But contrarian strategies has a downside, that crowd is right in trends but wrong at ends. So you have to see to it that you don't go against the crowd just for the heck of it. You have to identify where the crowd has overreacted and then go against the crowd. So there is something called a analytical edge also. So there's information edge, analytical edge. And third is a behavioral edge. all the biases that I mentioned during the presentation and how to reduce them. So from a lot of sports people, we learn how to reduce our biases. That gives you a behavioral edge. When you combine these, like information, analytical, and behavioral edge in your process, you do better. It is not easy, but it is very, very important. And like I summarized in the last slide, if you just follow those simple tools and ideas, I think a lot of this noise can be cancelled. The temptation to go with the herd can be reduced. Focus will be on long term rather than focusing on short term. You will be able to distinguish between luck and skill.
Wow. Great. Thank you, sir. Thanks for that answer. I'll just check if anyone is there for the Q&A. Okay, so there is no one who has raised the hand. So I will, at the last, I will just have few questions regarding Bajaj AMC also. So we just want to ask certain questions. So as a youngest AMC in the business, what unique investment strategies can we expect from Bajaj?
So I won't be able to share much details right now. When we are
Okay, that's
like when we are launching, we'll be anyway talking a little more about it. But as I mentioned, like looking at information edge, analytical edge, and behavioral edge. How do we put tools and ideas of those into our process? In my own personal experience, I think behavioral edge works extremely well. It means that you have tools and processes that help you reduce your own behavioral pitfalls and show you where the crowd has overreacted or underreacted, and then help you take advantage of that. I think that's something which is important to us. And all the tools that I mentioned during the presentation is something that we are actively considering in our investment process.
Okay, okay. Well, fair enough, sir. Thank you so much. Sir, I have also received one little technical question, but just would like to ask maybe if we can answer in a brief. Like the person is asking that while managing funds based on this behavioral edge, and as you have said that you might consider so many indicators when you are managing. So in that scenario, how you are going to take care of the portfolio turnover ratio? Because when there are so many multiple indicators, you might have to shuffle in between. So that is the concern that the person has maybe.
Okay. So let me split this into two parts. One is about the behavior, and the other is about actually the markets. What causes portfolio turnover? When your investment ideas are changing very quickly, say that causes portfolio turnover. How does that happen? There may be an event-driven turnover that can come. For example, COVID came in and people had to suddenly churn their portfolio towards low beta defensives, like sectors like IT, pharma, FMCG. So there was a churn which was caused by market events. Second is the portfolios you choose. If you are choosing more cyclical sectors, commodities or so, your portfolio turnover tends to be high because they may not be trending, they may be cyclical, and that causes you to keep churning your portfolio. So that could be a market-led or portfolio-led churn. One of the very important reasons for portfolio churn on the behavioral side is overconfidence. Like I know that the stock will have to stock moves between this and this price only. Like I'm looking for accuracy. That like if say for example one stock is at 100, I'm 100% sure the value should be 120. So I will sell it at 120 or 125. And then again, when it comes to 115, I'll try buying it because I know I'll make 5 rupees more or something. So that kind of overconfidence that there is only one price or one intrinsic value for a stock, and then I start churning based on that. That is actually overconfidence. It's also about me believing that I can time the market very well, that I know when it goes up, when it goes down. It's it's very difficult to know that. So I would say that it's a sign of overconfidence if you are trading too much, and one should try to avoid that.
Perfect, perfect, sir. Thank you, thank you. So we have
Shall
not
we
any
call it
questions.
here?
Yes, yet. So I really thank you, Nimesh sir, from the bottom of my heart for really taking out your precious time on Saturday morning and really enlighten us with your views and ideas about the behavioral edge of investing. Thank you so much for making this a great success for us, sir. I thank everyone, every investors for their patient listening. So you would like to end up the session with any summary or if you want to share.
No, I just want to thank you for having me here. It's my pleasure to be here on Pentagraph platform
Thank
to
you, sir.
talk about ideas where I can, what I've researched about behavioral finance and suggest what ideas people can adopt to make better investment. I'm sure with Pentagraph, everybody is in better hands anyway. So thank you so much. It was a pleasure to be here, and I wish you and your clients all the very best.
Thank you. Thank you so much, sir. Thank you, everyone. See you soon until we meet next. Thank you so much. And just at towards the end, would like to reiterate once again that mutual fund investments are subject to market risk. Please read all scheme related documents carefully before investing. Thank you so much.
Thank you.